Morning, everybody.
Morning.
Morning, Julie.
Well, hey Peter. Hi Matthias.
Morning.
Morning. Hello, Dr. Simonis. Space I can see. Hi, hello. Hello. Mickey. Nice to see you, Sony. Hello, Mr. Maldi. Hello. Some people I don't know as well. Nice to have you all here. Oh, this is nice. This is great. Okay, well, I think we can get started then. Thank you very much for joining this morning or afternoon, as the case may be. As you know, the past couple of months, we've been in touch with probably each and every one of you on the documents. So going back and forth a little bit with questions and comments that you had. We've engaged very much like the legal and financial colleagues on our side. But there's some sort of common questions emerging. And there's a sort of some sort of general basic information about the agreements of cooperation that we felt could be communicated to all partners through such a meeting. So that's the point of this call today, is to give an overview of the agreements of cooperation and how they generally function, how they're meant to function, and then and trying to a large extent to respond to the questions that may have come up in your individual emails, and then leave some time for discussion for you to raise any unanswered questions at the end. So we have our legal and financial colleagues with us here, and our colleague Kennedy Kamau is going to start off by presenting this overview of the agreements of cooperation. And then we can take it from there. Any questions or comments before we start from anyone?
Well, maybe just to say that I'm very happy with the way that WOP is assisting us in this process with close contact and sessions like this. It's very, very helpful. Thanks for that.
That's
curious to
nice.
what this session will be about.
Good. Well, that's I think our Derek and Mickey and Kennedy and Rosemary will be happy to hear that too. Okay, so over to you, Kennedy.
Thanks, Julie, and good afternoon, colleagues and partners. I hope you can hear me clearly.
Yep.
Good. I'll just switch off my video because I'm on Wi-Fi. I don't want to interrupt the presentation. Just give me a second. And I believe you can see my presentation.
Yes.
Good. Okay. Good. So I will take you through the whole cycle of the implementation of this project using the agreements of cooperation, which by definitions are legal instruments that Habitat uses to enter into a contractual agreement with IPs. In this case, these IPs could be non-for-profit organizations, a foundation, the private sector, NGOs, academic institutions to collaborate on a program or activity or a project. And just to note, the reason why we go for not-for-profit is because we believe the IPs do have this comparative advantage that probably may not necessarily be available from the private sector. So not necessarily trying to circumvent going through a whole procurement process, because we believe that we can have these commonalities between Habitat and implement partners to more or less bring out these beneficial elements to our partners. So in terms of the validity period of the agreement of cooperation, the start date is ideally the date of the latest signature. And just like to note that Habitat will be signing the agreement first, because the agreement must be legally cleared internally before the partner can sign the agreement. So we want to implore to partners to allow us to read the agreement, and then let Habitat sign the agreement first, and then the partner will sign the agreement next. And then the start date will be the date that the partner signs, the operational start date of the project. That's when the project activities will start. And of course, the operational end date of the project will be adjusted based on when the start date is signed. So if the project is running for a duration of 4 years, then the end date will be adjusted from the start date of the latest signature to, and then of course adding the duration, if it's 48 months, to the start date, and that period will determine the agreement validity period. The operational closure date, as I've indicated, will be the end date of the project activities, and the financial closure date will be 90 days after the end date of the project. So within 90 days, once the operationally the project is closed, you must submit all the financial reports before the reports that the project can be closed. And to ensure that we can pay outside of this 90 days. So you have to submit everything within this 90 days for any expenditures incurred, for us Habitat can make those payments. So are you aware that the agreement has 4 components or 4 key sanctions? The main agreement itself, which is Articles 1 to 15, it more or less includes areas around the core responsibilities of parties, what Habitat is supposed to do, what the partner is supposed to do, the different financial arrangements, issues around audits, reporting, issues around anti-corruption, issues around how you amend projects, and of course issues around how projects is considered closed. We also do have Annex A, which is the general terms and conditions. So the first 2 sections, the agreements and the general terms and conditions, are more or less what you want to refer to them as cast in stone. So they're not really available for too much change. These are elements that are pre-agreed internally within Habitat that form the bulk of the agreement. So we try as much as possible not to amend them and to try to keep them as they are. Then we have Annex B, which is the project document and the schedule of implementation or the work plan. This is what the partner submitted as response to the call. So this more or less defines what the key project activities that the partner is supposed to implement during the validity period of the grant with the respective timelines. We have Annex C that defines the budget and the payment schedule. We look this keenly in the following slides just to define what should be contained in the budget, what are the key milestones, what are the key schedules for implementation in terms of the payments, what you need to follow. And of course, the agreement also allows for annexes, additional annexes which are not really part of the standard templates for agreements. In this case, we have an Annex D, which more or less defines the WOP Code of Conduct. And in this document, these annexes also do serve as legally binding terms of references against which the IP performance and the delivery of the project will be reported, monitored, or even evaluated. I'll go to the next slide, which more or less presents the employee partner management cycle that more or less defines the key 7 steps that we'll go through in terms of how the agreement is executed and the project implemented and finally is evaluated. So the first step is already complete. The partners have been selected. And of course, it's within Habitat to ensure that these partners are selected through a very transparent, fair, and competitive process, that every partner who applies has a fair chance of getting selected without bias. So we're currently in the second step, of just more or less completing the legal agreement. We've been having some bilaterals with different partners trying to respond to queries. And we beg that you be patient with us as we continue addressing some of these issues that have been raised. And we hope some of them will be addressed during this presentation. And just to note, if you have any questions, please kindly post them on chat, and I think my colleagues who also join might be answering them as the presentation goes on. So in terms of the legal agreement, so we will send the agreement between the Habitat and the employing partner before the commencement of the agreement. A third is a step for execution. This is where the IP will more or less carry out the activities as described in the schedule of implementation and within budget, of course. And within that execution, we'll have, throughout the project implementation, we'll have the monitoring and reporting. So Habitat will do to reporting a midterm and a final review, monitoring of the project, and of course, it's for the partner to ensure that we do report regularly for us to monitor how well the project activities are being executed. We do have a requirement for audit before the final installment is done, and we'll also look into this as in the slide on financial reporting and audit. And of course, audit is carried out by independent auditor who is qualified. And I think we'll more describe what the requirements for these auditors are in terms of references. If you are happy with the auditing results and the recommendations that have been addressed, the project will be closed. Consider that all outputs and reporting requirements have been met. And of course, lastly, Habitat will carry out an internal evaluation of the partner, just in case to show that even for future contracts, we can always engage based on their performance. I'll briefly discuss on what we consider the key roles and responsibilities of implementing partners, in this case, the lead partners. Just to note that you're responsible and accountable for managing the project in its entirety, from start to finish. So the steps I've just described previously, of course, with the help of your Habitat, you as the lead partners are responsible for carrying out all these activities. And of course, to ensure that the resources we provide, both financial and in-kind contributions, are used effectively and efficiently to deliver the outcomes to our end beneficiaries. We need to show value for money, not just to our end beneficiaries, but also to the donors who are giving us this financial resources. And of course, I indicated before, you're responsible for project monitoring and reporting back to your Habitat. This is both for the financial reports and also for the narrative reports. And we're looking on what the requirements of those financial narrative reports are shortly. And I guess the most important thing is to note that the lead partner is a bit more obvious that you are the lead of the consortium. You are the lead of the additional beneficiary, additional partners, as well as beneficiary partners. So you are really managing the project in the whole project cycle. In terms of budget and procurement, so we require the IPs to submit annual, so yearly input-based budgets. We have supplied these templates before, and I'll show you briefly present the templates shortly. And of course, the work plans before any payments are disbursed. So these budgets are needed so as for us to track how well the partner is using the funds. Secondly, as indicated before, the AOC is not supposed to circumvent the process of procurement. So we don't use the agreement of cooperation, the process procure activities. That's why you limit how much of the project funds can be used for procurement. And in this case, we limit it to only 25%. So if you're given $100,000 of the project budget, you can use more than 25,000 of it for procurement. And no single procurement should exceed 40,000. So if, for instance, you're buying an item, it should not exceed $40,000. So that's a requirement. Of course, the IPs are authorized to make variation within the budget line items. For instance, you can move items between the budget line. Let's say, for instance, you want to move amount between salaries, supplies, you can move within a variance of 10%. So we need to make that clear. But if that is exceeded, then you need to get an advance approval from Habitat in writing. So you more or less write to us, just justify the reason why you need to move a greater percent of more than 10% between the different budget line items. So in terms of payment, you are aware that the agreement has 4 installments, which is 30%, 30%, 30%, and the last 10%. And it normally takes about a month to complete the disbursement. So it sends us the payment request in time and the outputs in time, or what's needed before the disbursement can happen. This is because we need to get back to you in terms of we need time first to review the outputs, and of course to move the process within our own systems internally. So the earlier those outputs are sent, the earlier those payment requests are made, earlier that would be better. And as indicated in the agreement itself, you can make this request for payment when you've utilized 80% of the money you've received already. Yeah, so at that point, you can make the request for next payment if you utilize 80% of the funds. In terms of the procedure for making the payment, ensure you make it an official letterhead of your organization and ensure that it's signed by the signature of the agreement or the financial contact person. So these people are already identified in the agreement and the contacts. So ensure that the payment request adheres to those two requirements. And again, the first minute is always the pre-financing. It's an advance payment. And we only require you to send us a payment request and a signed agreement. So we are advancing new money to commence the project activities. For the interim payments, of course, we'll make a substantive review of the outputs you've submitted and the financial reports. And in this case, for the interim payments, which is the second and third payment, we don't need the audited statements. We just need statements that's been certified, of course, by your accountant, and they've signed on them. And I'll show you a template for that shortly. For the final payment of 10%, we need the delivery of final outputs and, of course, audited financial reports. Yeah, and to note, but for each of the installments we'll be paying out, should not exceed either the authorized actual expenditures, which are the eligible expenditures as part of the budget, and of course the budget expenditures for the reporting period. So you can more or less overspend and request for more money outside of what's agreed in the payment schedule. So be within those limits. Yeah, regardless how much money probably you spend, if you overspend, just request the amount as part of the agreement. In terms of financial reporting, we require to submit biannual financial reports. That's every 6 months, of course, following UN financial rules and regulations, which is clearly spelled out in the agreement itself. So we require to submit financial reports every 6 months. And as you are well, just to indicate the habitat is required by IPSAS since January 2014. We did adopt the International Public Services Accounting Standards as IPSAS, and IPSAS requires us to make financial reporting from all employment partners to coincide with our year-end reporting period of 31st December. So regardless of whether you spend money that's been disbursed to you, we still need you to make a financial statement, to submit a financial statement by year-end, that on 31st December. Please kindly note this is a requirement that you submit this report for us to comply with IPSAS. And of course, we will be using a Habitat financial templates, which will show you just in a bit, to make this submissions. And as indicated before, for the interim payments, we just need them to be certified, but of course, the financial authority of the IP within 60 days of the project completion. So after 60 days, to cover the final 10%, because as you're aware, the final 10% is not probably covered as part of the audit. And that's why we need your departments, your internal accounting departments, to submit to us final statements within 60 days of project completion, just to more or less show in entirety how the project financial aspect has been carried out throughout. Another slide for additional reporting for additional partners. This is the requirement that lead partners have to follow where they are communicating with the additional partners. That you are allowed as lead partners to use your own financial templates, but of course you're more than welcome to more or less tailor the kind of templates that Habitat shares with you. So you can use our own financial templates to allow additional partners to report to you with the same templates. Yeah, but you can use your own. We believe that you make that choice. But of course, those templates and financial rules and budget should mirror, of course, the overall EU WOP financial rules. That's a requirement that we all should more or less agree to. And any agreements that are signed with you and the partners need to be shared with you and Habitat. Yeah, any agreements you sign with your additional partner, then please kindly share those with us. And of course, you're allowed to use your own templates for that. And of course, a key requirement is you're not supposed to transfer funds to beneficiary partners, only to additional partners. So please take that in consideration. Sorry. So I'll come to narrative reporting. Yeah, so you're required to submit technical and substantive reports to us in every 6 months, of course, in English. Yeah. Same for the financial reports. We need to make this biannual reporting for narrative reports. This is a more or less progress report. And then again, similar to the submission of the final financial report, you're also required to make a final comprehensive and detailed narrative report within 6 days of project completion. Yeah, so once you receive your 10%, please don't stop there. Please, within 6 days after the project has been completed, submit to us what you normally refer to as a project completion report within 60 days. And of course, again, we'll share with you the prescribed narrative reporting templates, the habitat we'll present to you to use in your in your narrative reporting. And then again, you're supposed to also lead the coordination of the reporting in the PMP tool, and this will come in later. We'll have a training on this in the coming period on how to use the tool. So you're required to coordinate the reporting, the indicators, and everything else within the PMP tool. Next is on asset management. So any assets any property that are acquired within the agreement, it's the property of your habitat until it's formally handed over to IP. Yeah, except for equipment whose purchase has been pre-approved. So if you have any pre-approved purchase, then it is more or less a property of the IP. But anything else that's not pre-approved, it remains the property of your habitat. And by definition, these properties are anything that's tangible or intangible items valued over $1,000 or more at the time of purchase, and of course have a useful value of at least 1 year. So probably if you're buying a laptop or anything else that's over $1,000 and it's going to be used for more than a year, then that's classed with the property, and it should more or less be in line with the requirements of asset management within your habitat. And IPs are required to submit on a regular basis, more or less probably at the end of the calendar year, the list of assets acquired, of course, through the use of the project funds, and they're still under their custody. And I'll share with you the template for reporting or capturing assets within the project. In terms of the use of the counterpart contribution, which is highly encouraged, they should be captured, reported, and monitored through the project delivery, whether in kind or in cash. So you need to do that of course, using the financial templates. They have a component for financial reporting for in kind and monetary contribution from the counterparts. And of course, they should be reasonable for completing the project objectives. And again, as I indicated before, they should be reported in the financial statements, and they should be auditable, and of course should reflect the fair market value of the services offered. And we do encourage that the counterpart contribution more or less address elements of overheads and other indirect costs, such as office space, equipment, and staff time. And IPs are more or less encouraged not to use and have that funds to cover such. Costs in terms of what staff time, equipment, office space, rent, that the IP can comfortably cover within their purview. In terms of expenditure reports and audits, as I said before, the financial audits are required before the release of the final payment. These are independent financial audits. They're carried out outside of the IPs. And for the interim payments, we just need them to be certified by your own competent financial authority. This is the accounting department. They can certify those reports and sign on them. And of course, again, this additional has been brought up by different partners who bears the cost of auditing. So this is covered under the agreement. So any cost towards the auditing of the project funds is covered as an eligible cost within the agreement. Another key question is on the selection of the auditor. So Habitat would give you the terms of references, the standard terms of references, which you can tailor towards engaging auditors for your program. But this is, and there's an exception for government entities. I think there's a requirement for government entities to be audited with their own government auditors. So we don't prescribe terms of references for government-led entities. They're allowed to use their own internal pre-approved government auditors where applicable. And of course, we require those auditors report directly to Habitat, and the results of the audits addressed by the IP before the final disbursement is made. So the IPs will make, of course, auditors will make recommendations on the audit, and then the IPs need to follow up on the recommendation and address them before Habitat can issue out the final payment. In terms of how to amend agreements, we hope that the project activities will be completed within the project duration. But if there are any eventualities, we're living in pandemic times, project activities could be delayed due to pandemic or any other issues, then we do allow for agreements to be amended. And mostly it's for durations. For this probability, which are less for a cost-related extension, where the amendment is extended with cost, but this is not really encouraged. We try to more or less limit the project, the implementation of the project within the budget. But there are chances that that this project could be extended with cost, but most of the time it's no cost, but with a duration extension. So we need that to be, if you foresee any chances of amending the agreement, please make it in a timely fashion, mostly about 2 months before the agreement ends. So that's why you need to closely monitor your project activities and make sure that if you foresee they may need more time to implement the project activities, that request is again sent early enough to allow us to more or less move it through the channels of approval and to allow us to send it on time. So in terms of how you make the extension, again, it's on official letterhead and submitted by the signatory to the agreement or the operational focal point for the agreement. And again, as I insist once more, that amendments after the expiry of the agreement are not really encouraged. It puts us in the risk, both IP and of course Habitat. In terms of the last step of the evaluation of the IP, this is an internal process within UN Habitat that evaluates how IPs have more or less provided good value for the work done. So Habitat will carry this internal evaluation of the IPs just to more or less a final evaluation, and we need to record this, especially for consideration for future contracts. And this is the first step towards many of engaging some of you in the work of GWOP. And we'll have two evaluations, a midterm review and a final evaluation. And this can be done either a staff member will travel to your offices and to your project location and to look at how well you carried out the work. It's a very simple process. Again, we're happy to share with you the evaluation form. It's a very simple form for the evaluation of projects. And of course, the evaluation will measure the quality of the work performed, the activities as part of the work plan, and of course, the compliance, of course, with delivery deadlines as specified in the implementation schedule, and of course, within the great quality and within, of course, within budget. Lastly, I want to speak about the agreement closure. At what point in time do you consider an agreement officially closed? This is when all approved final narrative and financial reports have been received. All the project deliverables have been completed and approved as specified in the work plan or the implementation schedule. We need to ascertain that all the project assets have been reported and properly handed over using, of course, the applicable forms. And of course, all audits have been received and of course, IP performance internally evaluated by UN Habitat. And just to note that within 90 days from the date of the operational closure, the project will be financially closed. I'd explained this earlier in my first couple of slides. And of course, if you have any money that is spent after this point in time, after the 90 days after the project has been operationally closed, then that money needs to be refunded to UN Habitat. Yeah, we don't foresee such an issue, but then if that happens, then you're required to submit any spent balances to UN Habitat within that time period. I'll briefly show you that the different templates. First, I'll start with the budgeting template. Just give me 1 second. Can you see my screen? Okay, so the budgeting template has more or less three key sections. The first part, of course, you need to indicate your name, the IP name, and the period of submission on the right. We have the details of receipts of the different installments, both in USD and also in the native currency or the local currency. And of course, at the time, you'll indicate the exchange rate. And this exchange is what you use to report if you're, of course, spending money in a different currency apart from the US dollars, then you need to use exchange rate when you're reporting expenditures. So this is the applicable exchange rate, the rate at which you receive the funds from your habitat. And it's important for the IPs to ensure that you don't overspend, regardless of the exchange rate that you spend within the budget. Even if the exchange probably is against the US dollars, it's out of favor of the US dollars, then please ensure that your expenditures fall within the budgets. We have details about the interest earned if you're earn interest from the installments, the 4 installments, they need to record that. And of course, the use of the interest accrued from the project funds, of course, are available for use by the IP, of course, with advice from UN Habitat. In some of the detailed budget period, the budget report, we have the expense categories on the left, you're supposed to report under. And then we do have the different columns for the different budgeting periods. We have budget for period 1, period 2, period 3, or period 4, and you're at liberty to more or less insert as many periods as your agreement allows. And of course, the periods will be defined based on when the agreement starts. So if you sign the agreement in November, then your period 1 starts in November. And of course, just remember that the reporting requirements for financial reporting every 6 months. So you'll be using this templates to make the biannual reporting. And these expense categories are the ones that you submitted your budgets in. So how you budget for your how you budget is how you report your expenditures. I'd like to bring to your attention the issue about variance. I did explain that in my presentation, which is calculated between the total budget and the total project expenditure. So you're not allowed to go over 10%. So the difference between the total budget and total expenditure should be within the 10%. So the variance should be within the 10%. And if you go above that, then you need a reason for the variance. And if you also need approval from your habitat in advance if you plan on spending much more than 10% or moving more than 10% between the line items. So the first part of the part is for purely funds given to you by UN Habitat. The second part is funds that you contribute in kind. As I said before, the funds that are done in kind, that are contributed in kind, are also supposed to be audited. And this part allows us to see how well you plan your funds contribution, the ones you provide to the project in kind. The part C, if you're receiving any other funds from any other partner that are tailored towards the particular project, then kindly record them in the same format in part C. So these are funds and the recording of funds expected from other donors. And of course, you need to sign this to have it more or less certified internally, of course, by your finance person, your director, and of course, your executive director. Please have them sign this agreement before this template before submission. A second, one more. In terms of the asset management, I'll show you briefly the form to fill. It's a very simple form. So insert your name. And again, as I said in my presentation, it's supposed to present this form at the end of every year. So December 31st, please send us a list of all assets procured within that period. The asset description was the make, the model, the serial number, the location, the price at the period of purchase, the date of purchase, who's the custodian, is it under warranty, and what's the working condition. So please send us a list of all assets using this form at the end of every year. Then the terms of references for the auditor, we'll also be sharing this. It's a Word document. You can tailor it towards your preference, but just maintain, so it's more or less pre-filled for you. Yeah, so just change the dates and of course indicate your name in the slots provided, and just tailor it towards this particular project. So we'll be sharing with you these templates for your use when you're planning on hiring your auditors. For now, that's it. I'll hand you over back to, before I hand you over back to Julie, let me just show you briefly our internal evaluation form. Again, it's not secret. It's a very straightforward one single form that looks at the different components of the project, looking at the budget, the timelines, the quality, and we do assign you a ranking or a rating based on how well you've more or less complied with the requirements of those three categories. How well, of course, your budgets, your activities and outputs are really meeting the work plan, how you're adhering to the timelines, and of course the quality of the results, and of course to give you an overall rating that will determine future collaboration. One of the factors contributing to future collaboration with you. And with that, I'll hand you over back to Julie, and if there are any questions, please, we'll be happy to address them at the end of this presentation. Thank you so much for your attention, and back to you, Julie.
Kennedy, thanks a lot. That was very clear to me, and I hope to others as well. There have already been quite a number of questions put into the chat, some of which we have responded to in writing, but which are probably worth repeating out loud. And in addition, people can raise their hands and ask questions orally, as sometimes a little hard to articulate in succinctly in writing. Some of the easier ones, let me start with those before I hand over the trickier ones to my colleagues. There is a question about the MOU. So it should be clarified that the MOU is not a requirement for the AOC signing. We need it to be submitted. We need this MOU between the partners be submitted to us within the first few months of the project, but it's not a prerequisite for the AOC signing. So don't feel like that's an obstacle. We are also just clarifying, yes, we are requesting that we work out the agreement of cooperation. So we're going to, some of you have already done this with us. We've had a bit of back and forth on the documents, but that we finalize that on our side before you countersign. So before sending it to the final signatory on your side, we're requesting you allow us to ensure that it's all up to speed on our side. It's all it's meeting all the requirements. And then there are some questions on tax, which there has been some explanation or response given in text in the chat. However, it may be worth asking Arcus Berlin to please maybe express his concern or elaborate his concern out loud, so that we can, our colleagues can perhaps respond more specifically to his concern there. Arcus, would you like to go ahead with your question?
Yes, thank you for giving me the floor. Good day, and thank you for invitation. Have an opportunity to speak to all of experts involved in the WAP program. We are very proud to take part on this, but we are a public organization, and we have to include in our invoices the tax. And all that we have seen up to now is that there is no tax. So we do have to finance this, and this is a burden. And so we do have to ask, how shall we handle this question?
All right, that is that is clear. I think that we can we can send that question over to Derek, who I understand will help us respond on that. Maybe we should take one more question before we go to that one. Anyone else who has a question that they would like to speak out loud?
Yeah, maybe Julie, I put in the chat a question about purchasing equipment. There was basically two options given. Equipment remains property of UN Habitat when it's not being approved by Habitat upfront. What is your preference? Would you like that we get all equipment that we purchase approved by UN Habitat before we do so, or do you say like no, just because it's going to be quite a bit of administration and communication? What is your preference when it comes to this?
Okay, well, thanks. I mean, I think that the point is that we would prefer to minimize the number of kind of transactions, so where we have to approve after the fact a transfer of goods. And there are some things that partners are, particularly for the big purchases, they're for beneficiary partners, something specific to facilitate the learning or the WOP activities. And those things were never meant to be returned to us. So we just like, if it's clearly for those beneficiaries, in your annual budget that you will submit before requesting your installment, you indicate, just clarify that this is for the beneficiary partner, and that will allow us to clear that so that we don't require a transfer, a formal transfer later on. In general, all of the purchases that you're making will follow what you have provided in your detailed budgets in your proposals. And then, more specifically, what you're providing, what you're presenting to us in your annual budgets. I mean, for small things, of course, we don't need to know about that, but we understand that it will be following the rules and it will comply more or less with what is presented in the budget. I hope that answers that question.
Yeah.
And okay, great. And then I'll now hand over to Derek to answer this legal question about the VAT. Thank you.
Thank you very much, Julie. Thank you very much for attending, colleagues. Because I've seen my colleague Nana responding to that matter on taxes, I think she can explain much better. So I'll hand it over to Nana to take it over. Nana, over to you.
Thank you, Derek, for the floor. Hello, colleagues. Hello, everyone. So now just to answer the issue related to taxes, as you can see from the chat, I'll just reiterate what I've indicated. I stated that in accordance with now the general terms and conditions of contract of the agreement of cooperation, it specifically outlines that Section 7 of the Convention of Privileges and Immunities provides that the United Nations, including UN Habitat, is exempt from all direct taxes except charges of public utilities, and it's exempt from custom duty charges of a similar nation with respect to articles imported or exported for its official use. And I further indicated that in the event any government authority refuses to recognize that recognize this exemption from such taxes, duties, or charges, then the implementing partner can consult with UN Habitat to determine a mutually acceptable procedure in the same general conditions of contract. We have indicated that the implementing partner can authorize the UN Habitat to deduct from now the implementing partner's invoice any amount representing taxes, duties, or charges, unless the partner has consulted with UN Habitat before the payment. And UN Habitat has in every instance specifically authorized the implementing partner to pay such taxes or duties or charges under protest. And in that case, the implementing partner will then provide UN Habitat with written evidence of that payment, or rather the payment of those taxes that have been made, and then we shall we can take it from there. So basically, the essence of those two provisions is that one, we're stipulating that UN is exempt from taxes. Secondly, by virtue of that, UN Habitat or the UN cannot be is not really liable to reimburse the implementing partner for the imposition of such taxes. So basically, the provision on relating to taxation in the agreement implies that the implementing partner should resist the imposition of any taxes or duties. However, the UN Habitat or the UN is under no obligation to obtain any tax exemptions from a partner. So in essence, it's the partner, or rather the implementing partner, who bears the risk in the event a member state does not honor the commitment of now the tax exemptions from the UN. I hope this clarifies your query, but if you need more elaboration, guidance, I am happy to elaborate on that. Over. Oh, in addition, I just had one comment from a now I'm speaking from a legal standpoint. However, maybe from a practical standpoint, probably Rosemary, who is also part of the meeting, can further elaborate on this. So, Rosemary, if you can further elaborate from a practical standpoint, it'll be much appreciated. Thank you.
Hi, everyone. Thank you very much, Nana. I believe from a practical point, as you have indicated, I think there's also a need to perhaps the partners to help us understand some of the things that they think would be a challenge in terms of complying with what you have just stated in terms of what's set out in the terms and conditions, so that we can understand some of the issues we may have to deal with directly. Because ordinarily, yes, we would be, we want to minimize the backs and forth that we have to have on sort of the detailed level of transactions that they have to engage in. But we're sort of guided by the overall umbrella of what we're operating under. But it might be useful maybe if one of the partners can elaborate some of the things that they see as potentially going to be a problem in complying with what has been set out by Nana. But ordinarily, we have not had many issues. Most partners have been able to work within this, and because the procurement element has not been substantial. But it would be good to understand, probably give the partners an opportunity to explain or to indicate where they would have a challenge with complying with this arrangement. Thank you.
Okay, if there's anyone who would like to elaborate on that right now, then they could do so. Otherwise, they could follow up in writing with Nana or Rosemary on that question. I see a hand up. It's not showing me who that person is. Let me see.
It's me.
Please, whoever you is, whoever me is, please speak.
Okay, thanks. Yeah, so my name is Reinder, working for VEI in Mwanza, Tanzania. So our beneficiary partner is the Water Authority of Mwanza. And in terms of tax exemption, they are obliged to pay tax, to pay VAT. We have experienced only when it comes to a bigger procurement, and then, you know, there is the importing aspect. There is a possibility to request that exemption from the government. But it won't be that big in this WOP, and let's say the smaller amounts we do in a piloting phase, like piloting scale, I believe, in line with the previous speaker, it will be very complicated to have tax exemption applied, although the UN regulations are very clear.
Thank you very much for that additional information. I think in that instance, as our legal team have indicated, you would have to submit such a case, and then it's considered in its own merit, and we would then, you know, as indicated, provide the evidence that that has to be paid, and then provided we're working within the overall budget and that it doesn't take us out of the budget, then the project leader, in this case, Julie and her team, would then consider it and give the prior approval in order for you to proceed. Then we're still within the overall framework of what we have to work within. Thank you. Thank you.
Thank you.
Any further hands on that particular question? If not, we can go back to what has been raised in the chat. So we did discuss tax and the order of signing. Right, there's a question about this specific question about the signing order. Maybe if it's not a general question, maybe we can bring it up separately, or you feel free to raise it here if you think it's something that might apply also to others.
Sure.
Hi.
I'll get in touch bilaterally. Maybe just we have one that's already, let's say, co-signed. But if that's not if it's not good enough, of course we'll bring it back, you know, with the adjusted Word version. So it's okay. Let's just pick it up bilaterally. It's just one that we had already had co-signed. So. And it's already gone to a ministry and stuff, so we were hoping maybe that could be an exception. But if it meets your requirements, of course. So I'll separately send an email to you and the WOP UN Habitat team.
Very good, thank you. Right. Any question? Other questions that I'm seeing here? Nothing. Certified documents. Right. Another one from Arcus. Do we have to certify the related documents in English? Right. There's an additional burden of cost for us. Okay. No. So this is something we've dealt with also for other languages than German. And Derek, perhaps you can provide the definitive reply on that one, but I think Marcus, you'll be satisfied with the response.
Thank you, Julie. Actually, I've already done it, but I can just say it again. What we require is a translation of the supporting document. For example, in this case, if you have a certificate of incorporation, or if you have an audited financial reports for the last 2 years, we will just require a translation telling us what those documents are, or what those documents contain. That is what we mean by the translation of the documents, but not really a certified English translation. So it's only a summary, or in English, or a translation of that document if it's a certificate of incorporation. What we require to be certified and to be proven as the original copy is now the certificate of incorporation itself. If you're sending us a copy, We want it to be stamped by a commissioner for oath or a notary public to show that this is the original copy or this is the copy of the original copy. I hope I have answered that question. Over.
Great, thank you for your questions, and thank you, Derek, for your clear reply. Another question here is relating to the MOU. Now, we are seeing that one of the additional partners in one of the agreements is unable to sign a multi-partner MOU. Okay, that's interesting. And how should we deal with this, a bilateral signing and so on? Again, I don't know if this is a common problem, if others are facing this as well. But I mean, basically, we need there to be some sort of understanding among all the partners. If this needs to be done through a series of, a kind of articulated kind of agreements, I guess that is also workable. The spirit of kind of collaboration between all the partners, it's nice to have a document that clarifies that and that everybody is signing on to. I think that makes sense. But if there's a real legal obstacle to that partner entering into such an agreement, then we can find a workaround somehow. Would you like to elaborate on that, or do you want to bring it up separately?
I think we can discuss it separately. Indeed, I guess it's a legal question, coming from the legal department. So I think the spirit of partnership, of course, is there, but indeed, and that's reflected in the MOU. But I think it's a legal topic indeed. So we'll come back to you maybe with a suggestion. Okay,
that's great. We love suggestions. Then we have some questions around insurance. This is not the only time we've had some questions around that. We have also provided some replies, but perhaps, Derek, if you could step in with a little bit of, information about how this works. I don't know if you can see the comments in the chat. You may have already had a chance to look at them and can reply. And Nana also, maybe if you are able to compliment. Thank you.
Hello. Hi. So Derek was quiet. I was actually in the process of responding to Rent on the chat, responding to the query of insurance. And basically, I wanted to explain essentially as an additional insured. Now, under the agreement, this is in relation to provision 6.4, 6.4.1 and 6.4.2 and 6.4.3. So as an additional insured, UN Habitat would come under the implementing partners policy as if UN Habitat was the primary insured. And the rationale for this is if now the implementing partner fails to press a claim against its insurance, UN Habitat as an additional insured would be able to do so. So that is the essence of having UN Habitat as an additional insurance. Now, with regards to the questions on waiver of subrogation under Article 6.4.2 of the General Terms and Conditions. So just to explain a little bit, subrogation is the substitution of one for another as a creditor, by which the new creditor, now the subrogee, succeeds to the former's rights. So basically the purpose of subrogation is to compel the ultimate payment of a debt by an entity that should rightfully be responsible for it. And an insurer typically has these rights under its policies to act as the subrogee of the insureds, thereby acquiring the right to bring claims against third parties causing the loss. However, as an insurer's right of subrogation may be waived by the insurer before any loss occurs. So basically, in general, the insurer as the subrogee, would be entitled to all of the contractor's rights and would be subject to such limitations and conditions as were binding on, say, the implementing partner. So accordingly, if a waiver of subrogation is not included in the contract, so now this is the devil's advocate, then the insurer would then be entitled to pursue claims against, now, for instance, UN Habitat in respects to amounts that the insurer might have paid to UN Habitat under, say, insurance or policies taken out by the implementing partner in situations where UN Habitat or its personnel might be said to have partially caused maybe damage or harm or some loss. So basically the purpose of subrogation therefore is then to prevent the insurer from seeking to bring any claims or such claims against UN Habitat, having paid insurance proceeds to now, for instance, UN Habitat. However, now because now this now becomes more the explanation I provided is very legalistic, and if you want maybe bilateral one-on-one further discussions relating to the provision of insurance, our office will be very happy to further furnish that with you, probably with examples, etc.
Okay, great. Because I understand that we're waiving certain, let's say, rights, and I understand the essence, but what we're trying to understand is indeed what additional cover would we need to obtain from an insurer or something to meet that requirement. So maybe we can pick it up bilaterally, but it's still not clear to me. We've been in touch with our insurance company also to try and see clarity from their side on their understanding of what this means, but maybe we can pick it up bilaterally.
No problem at all. Yeah, thank you. Thank you, Rent.
Right. Well, I'm very glad that some of you understood that response. It sounded very thorough, but I didn't fully get it myself. So hope it responds to your questions. Thank you, Nana, for that. The other questions here. The suitable person to be in touch with further information concerning the taxes. So you can always continue to utilize the correspondence protocol that we gave you at the beginning. So you can write to those addresses, UN Habitat, WOP, etc., and then we can forward them to the individuals. And we will seek to maybe provide a little bit more explicit guidance on that. More general guidance that will make it a little bit clearer on how to proceed. We have more questions. Arcus Berlin, that we can maybe get in deeper in written form. Okay. I'm sorry that I'm reading this as we go. The non-deductible VAT. Okay, I think these are all things that we are maybe more specific to that case or that can be clarified in those bilateral discussions. Okay, personal expenses from the okay. Okay, yeah, those look rather specific and probably better suited for a more one-on-one discussion, if that's okay. Colleagues, feel free to jump in if you're ahead of me in the chat and already have a question that you can bring to the table. Federico Perotti is again asking this question about translation. Federico, I'm hoping that the response from Derek has now clarified that so a superficial English translation then is sufficient for us. Now, what about the question of notary, Derek? Is this something that I believe you had addressed already individually? Could you reply on this one, please? The question of the notary in Italy.
Yes, Federico stated that it's expensive to do it in Italy. So I was suggesting if then the university can share with us the copy of the supporting documents, and also a link to a portal which we can use to verify if this is the actual copy, or that if this has been issued by the government or the issuing authority in that particular country. Because the essence here is to really confirm that this is not a fraud. You know, like this is the actual true copy, and this entity is registered, and we are dealing with an entity that is basically for our due diligence purposes. Yeah.
Okay, thank you very much.
All right.
We'll try to do it. Okay, thank you.
Rosemary, there's a question about the foreign exchange fluctuations and so on. Is it the responsibility of the implementing partner to ensure that financial commitments in local currency do not exceed funds provided in US dollars in the agreement of cooperation? Could you reply to that one, please?
Thanks, Julie. I believe that's the one that Kennedy has responded to. But essentially what it is that we are committing the funds in our books in US dollars, and we're, well, the agreements are in US dollars. We commit the funds in our books in US dollars. Once the partner receives the money in the event that it's a different currency, then they need to take note of the exchange rate for which that they receive the funds, because that's the rate that they will then report back to us. Essentially, we will be recording the expenditures in US dollars. Therefore, the financial report needs to be submitted to us in US dollars. In the template that has been shared by Kennedy, you may want to have a provision to put the local currency amount if you find that useful. But at the end of the day, we have to be able to account for the actual US dollar that has been transferred. Whether there has been a gain or loss in terms of when the transfer is being done, it needs to be accounted for and recorded accordingly. So that if you receive $100,000, we have to be able you have to be able to report back to us 100,000 US dollars in order for us to be able to fully reflect what was in the agreement. And I can see Kennedy is sharing the template, which shows the provision where the amounts will be indicated and the exchange rates. And in effect, when you're reporting back to us, we need to be able to capture the full value of what was transferred. If I can explain just the background of how our system works, when we make a payment, a disbursement to the partner, it is set aside as a receivable or an advance. And it's only when we receive back your financial statement accounting for the use of funds are we able to offset. Therefore, we have to be able to account for the full dollars that we have sent out. And that's why if there's an exchange rate gain or loss, that needs to be reflected in the financial statement, what you received in terms of your local currency, and reporting back has to be for the exact amount that we have disbursed in US dollars. I hope that helps to clarify that.
Great, thanks very much, Rosemary, and also Kennedy for your written reply. Stéphane Baudard is asking, must we also certify official documents that are a law, statutes or governance, which are more official than a true copy? I think that, Derek, if you could maybe reiterate your earlier comment on this, that would be helpful.
For official documents, I would like to ask just Stefan to maybe give us a more specific example of an official document in this case. Because
Yes, thank you. Yes, in our case, our status are law in Wallonia in Belgium, and is yes, probably our status are more official in the law than in the true copy. It's just my question. Why not to share a link to the website of the government with our document?
Okay, yeah, I understand what you're. Thank you very much for that clarification. So the answer here is no. No, because you find that the entity that you're in or the organization could have been established by a certain government statute or a certain government law. So if you can maybe just share with us that statute, doesn't have to be the whole of it, but maybe say that, for example, if it's agency A has been established under the laws of your country under statute, for example, 439, if you can share with us that document so that at least we can see that this was established by at least the government or by a government statute. So you do not have to certify that statute itself. I don't know if I've answered your question.
Thank you.
You only certify the certificate of incorporation itself, but not the statute that mentions the establishment of that entity.
Okay.
All right.
Thanks.
Okay, thank you. Oh, Matthias, please go ahead.
Yes, good morning, everybody. Matthias Grimm from WOP in Sweden. Thanks a lot for the session today and also for the WOP Congress. Very inspiring the last 2 weeks. Just two questions. One about the funding to the beneficiary partner that Kennedy mentioned earlier. How about assets made or procurements made in the country of the beneficiary partner? Because is it still possible to make a transfer between the lead partner and the beneficiary partner, according to the presentation from Kennedy earlier today? I remember it was written that it was not allowed to make funds from lead partner to beneficiary partner. And the second question regarding the intellectual property, if we would like develop or generate somehow an intellectual property or a tool within the WOP with the grants from the UN Habitat, would it be allowed to use this kind of tool or intellectual property within a similar project in the future with, for example, a neighboring municipality or the beneficiary partner? Or would that be not allowed?
Yes, first of all, with respect to the intellectual property, if our legal colleagues could elaborate a little bit on the practical application of those clauses, it would be helpful for Matthias. And meanwhile, I'm going to try to give you more of a reply about the beneficiary partner, a more detailed one. If the legal colleagues could go first, that would be good.
Over to you, Nana.
Thank you, Julie. Thank you, Derek. With regards to, I'm just trying to look, I'm reading the question. With regards to now the policy relating to copyrights, patents, and other proprietary rights, so basically the policy as derived from the regulations and rules and relevant administrative issuances of the United Nations, it has been the long-standing practice of the UN and the UN Secretariat to always retain all proprietary rights in work funded by the UN, which includes rights to protect UN intellectual property. So for the UN, it's also essential that a partner cannot utilize such work in a manner that would be contrary to the best interest of the UN. So just to reiterate, this UN Habitat retains all the proprietary works for work that is funded by UN Habitat. I hope that clarifies the question. However, in the agreement, because when the clause says except as is otherwise outlined in the agreement, so UN Habitat can, of course, grant a license to the implementing partner to utilize now such copyright or other proprietary rights, which can be elaborated in the actual text of the agreement of cooperation. I hope that clarifies the question.
Great, thanks you.
Thank you, Matthias. Thanks.
Matthias, one of the way that the program was designed was that the transfers and grants are can go to additional partners, but not to beneficiary partners. That's the way the rules were set up. This is also because the thing is that the main cost of additional partners is often staff time, so we'll recover their staff time, but not those of beneficiary partners. But in the case where there is a procurement to be made, that's benefiting the beneficiary, and it's for various reasons most sensible for the beneficiary partner to be making that procurement, then such arrangements can be made for that, so long as it's covering only those kinds of expenses, and that's clear. We can just clarify that up front in the annualized budgets. I hope that helps.
Okay, yeah, great. Because we've been thinking about maybe a warranty reasons for some procurements. It would be easier to make some of the procurements locally instead of making them in the European Union and bringing the material or shipping it to the beneficiary partner country. So
yeah, some big pipes in the plane.
Yeah.
Practical. Yeah. Okay. All right.
Thanks a lot.
Yeah, thanks. Kun?
Yeah, thank you, Julie. Could you say something about the planning? Within our partner organization, there are some developments that we would like to anticipate on with our project. It's happening in December. I presume we can only start spending money after the signatures both signatures are there. So could you give us an indication about the planning, to see if we could anticipate on those activities in December of that, or that might be too quick, and we should better focus on January, February.
Right. Okay. Very good question. Okay. So first of all, one of the things I wanted to announce at the end of this was that we would like to impose, a deadline for the submission of these CAs for the 10th of November, which I know is quite soon. It's obviously not the clear, Britta is looking shocked. We're working to do this as soon as possible. So I think the sooner the better. So if we can aim for the 10th, that would be very, very good. We are going to submit, we're doing a back and forth. In some cases, you have already submitted to us, and you are now waiting for a response from our side. So it's a shared responsibility here, and we're also working hard to try to get things back to you. But we would like to have that deadline. Now things are going to be approved then internally from our side, and that can take a little bit of time, but our processes have been pretty thorough. So we are hoping to minimize that time requirement. And if we're able to actually submit these, have these final documents back from you by the 10th, and then we're able to submit them in, this December date that you're talking about is potentially possible, but recall what Kennedy has said about the fact that it will take, you can expect about a month before payments are actually received. But of course, it's from the signature. So if you can advance some expenses, that's another matter. One question that I would like to raise to my own colleagues about the in-kind, the counterpart contributions, presumably even counterpart contributions made prior to the signing should not be attributed. So I'm thinking if Kun were to organize his workshop entirely with their own resources, could they include that in the narrative as part of the project, for example, or do we really have to wait until the signing of this? I presume yes, but maybe Rosemary, Derek, Kennedy could reply.
Sorry, can I come in briefly? Yes, thanks, Julie, for that. And I think it's always, I think, safe to just allow the agreement to be signed, so that at least we are actually within the validity period of the grant. So I guess regardless of the source of funding, whether it's intent funding or it's our own contribution, then let's try and spend it within the agreed duration and validity period of the agreement. Yeah, it's safe to wait, I think. Yeah.
Yeah. Yes, exactly. So we'll just do our best to have that processed as soon as possible, but that may be a little soon, to be honest, to be planning for December for our first event. Yeah. Okay, other questions that about the signing by way of electronic signing or signing on hard copies? And we have clarified that it can be both. And we do apologize for any miscommunication about that, because in the original sending we asked you to send hard copies of everything, but we're now confirming that electronic signature is legally acceptable, and that we can share those electronically as well. We have just a few more minutes on our schedule. We're always happy to finish early if we can. But maybe any final questions from anyone out there that they don't think that they, that they think might apply to others and are useful to bring up in this common forum. Otherwise, we can pursue them one-on-one, or comments from colleagues, messages. Rosemary, please go ahead.
Thank you very much, Julie. I just wanted to reiterate the issue about the financial reporting on the 31st of December and why it's important for us. Just to mention that UN Habitat is following the International Public Sector Accounting Standards, and therefore our auditors require that we record all actual expenditures incurred in a particular year. So as I had alluded to, that when we disburse funds to the partners, it's recorded as an advance and only captured as an actual once we receive the certified financial statements on the use of the funds that have been disbursed by UN Habitat. Therefore, the importance of receiving that report for 31st December is important, because then we are able to capture what the partner spent against the funds that we have disbursed in that particular year. So, and this is normally required by the second week latest of January. So if, we could request that this is received in a timely manner, that would really, really help us in ensuring that our books are compliant with the IPSA standards as required of us for all the agreements that we have signed with our partners. Thank you very much for that, Julie. Thank you.
Thanks, Rosemary. And just a point of clarification on that. So this is something that we're saying is required in addition to their biannual financial reports, is this statement of expenditure. But if the timing aligns perfectly and their one of their biannual expenditure reports comes in just at the very end of the year, then that would presumably cover that requirement, would it not?
Yes, to the extent that it has accounted for the funds that have been received. Now, ordinarily, if say a partner receives, depending, because I believe all partners will have different cycles based on their when they sign the agreements. The 6 monthly may fall maybe middle, December or November. But even if you receive, say, an advance in the last quarter and you have not spent it, just let us know that you didn't spend. It's good to send still a zero expenditure statement, because then it's clear that the partner is still holding the money. They have not actually made any expenses out of that particular disbursement. But we need to know. So even a zero response, zero expenditure report is accepted, because then we will record accordingly. Thank you.
Good, and partners will remind you of that when the time comes. Yes, Rainer.
Yeah, it's me again. So two things. You said like the copies can be sent in soft copy. There's no need for hard copy anymore. Is that correct? So any document can be sent in soft copy. And the second question is the start date, because you request an annual financial report. Suppose the start date, like if it is signed like 1st of December, that directly requires the first report to be submitted after that, covering only 1 month. I was just wondering if there is a, to make life more easy, if it is logic to start the 1st of January.
Rosemary, it's true that I have the same kind of questions, like just practically speaking, how do we do this? If they haven't received any funds from us yet, like if it's signed the 1st of December, but their funds are, haven't even been received yet, I guess as long as you receive funds in your account, then you'd be required to do it by the 1st of January kind of thing.
That's correct, Julie. If you haven't received any funds, then we really don't have any advance reflected in our books against that partner. So it's if you receive, say you sign it in November and by December you've already received. Again, at that point we may not expect that you have spent any money, but as one of the partners indicated, if you already have a fully signed agreement and you already start implementation using your own resources, and you have, by the time you receive our funds, you've already incurred expenditures within the validity period of that agreement, then we do expect that you will submit a financial statement for that particular year, because then it will be correct to reflect the actual expenditures incurred for our grant with the EU for that period accurately. Thank you.
Thanks.
Great, thanks. And then just the first question being to confirm that no hard copies are required. I do understand this to be the new sort of COVID protocol. No hard copies are required. This doesn't, of course, the certification is still required, but the documents can then be sent electronically. Derek and Nana to just give me a final confirmation on that, but I believe that to be the case.
Hi, Julie. Yes, just in response to your query, yes, all documents can be sent to us electronically. They don't need to be in hard copy. Electronic is just as fine, just fine. Thanks.
Okay, well, this is great. And any other final burning questions before we wrap up, or can we finish on time? Great. Well, thanks so much, everyone, for joining today, and especially to colleagues for providing all the information and so on, and for also for being very available for queries that are coming in by email and so on. So we continue to be in touch, and we work towards getting these agreements signed as soon as possible. Okay, great. Thanks, everyone.
Thanks a lot.
Thank you. Bye.
Okay.
Bye.
Thank you.
Bye.
Bye-bye.
Thank you very much.
Bye-bye. Thank you.
Bye.
Thank you. Bye.
Bye.
Thank you very much. Bye-bye.